Nike is going to report earnings after the closing bell. Time was 12:56. What we're going to feature here is that Nike is up $1.22 going into the earnings. The put options over here, the 97.50 put that expires Friday on 12/22, has 3,800 contracts, and people are buying big here going into the close on these put options. This guy bought 100 contracts at $1.39. Then there was lots of 40 contracts paid at $1.40. Look at the volume increase, and this is live in the marketplace going into the earnings report on Nike, and people are very bearish because they're buying 3,800 of these contracts going into the closing bell in 3 minutes from now. And we wanted to feature where the majority of the crowd was on that put side. But on the flip side, on the $100 call, you got 4,300 contracts traded. That Nike goes up above $100 on the 12/22, and that's up and out of the money slightly. Okay, so there are exactly 4,300 contracts to the call side. If we go to the 97.50 call, which is now in the money, there's only 1,100 contracts on the call side of 97.50. Whereas here, we have 3,800 of the 97.50 put. So you got twice the volume on the put side of the 97.50 than you do the call side that I just showed right here. That's 1,196 contracts. And there are some people that are buying them right now. Let's take a look at the $105 call. There's 3,100 of these traded. So, Mr. Plain, let's go buy 10 of these right now. Up and out of the money 105 call, just in case there's a big surprise. There we go. So what we did was we bought some $105 calls just in case Nike does well. But if Nike doesn't do well, then we will be right here. We have the 97.50 put, and we paid whatever it was there, $1.40. $1.31 is a low, $2.24 is a high. 4,147, so we got volume coming in bigger on that side of the market. As far as the $95 call that's in the money, there's only 140 of them traded. And let me tell you, these can go down depending on what Nike does. So basically the $95 put, which is below the marketplace, there's 2,500 of these $95 puts. So they're banging these $95 puts below the market. And the ones that we have here is we have the 97.50 puts. That's the big volume here. But then we bought up and out of the money here for 20 cents. Just in case it wants to go higher, and there's 3,200 of those traded up and out of the money. Nike would have to have one heck of a good report, and this stock would have to gap up to at least 103.50 and then run higher for these to get any real big premium. But once again, it's about how do I hedge my risk. So if I lose $200 here in my 10 contracts, that's okay, as long as if the stock drops and I make $1,000 over here, I still can't lose money. I'm on both sides of the earnings for Nike. And that's just using, and you can see that right now we're at 4,200 contracts, and we're going to close right now. There's the closing bell.